Hi folks, Nick here, recapping the week ending 6/12. Week ended on a disappointing note. The markets are down across the board. It has some green shoots. I'll get to that in a little bit. The score, if you look at the whole week, you'd think it's much ado about nothing because we're still stuck at the middle of the range. However, it was far from that. You know that if you've been reading my notes every day. So the good thing is that the price action throughout the week on everything we cover went almost exactly as planned, meaning the ranges held up nicely. The bad news is we have a volatile week coming. We have at least two scheduled volatile events and the ongoing Greek saga. So the headlines from the Greek saga continue as usual. We can get a headline one way or another. I am convinced that there are some people there who can write headlines that are profiting in the stock markets. I am totally convinced, but we can't prove it, obviously. Well, we start off with Draghi, I think, comes up first at bat. We have the ECB event and the U.S. Fed event. And Draghi is going to probably speak first, and he's usually has a positive effect on equities because he's usually bullish. We're going to do this. We're going to do even more, blah, blah, blah. The Fed event is binary, and we can talk about that in a sec. Actually, let's talk about it right now. So the Fed event is we're going to get the rate decision. All right. There are three outcomes that I see. Other people might have other opinions. Number one is an extreme. We all, and I'm going to put it in air quotes, know that there's no June rate hike, right? I told you that based on what I heard last. I wrote out the June rate hike. If they raise it, I think we'll correct. We will have, let's put it this way, it will have a negative effect on equities. Is that politically said? Yes. So that's one extreme. If she raises rates in tomorrow's next week. Number two, the other extreme, if they hint at no September rate hike, not June, but no September, then we are likely to see a move up because a lot of people are expecting September, and if they price that out, they're going to rush in and try to do some positive trades between now and September. Okay, small caps will lead up, so if you're short the small caps, you might want to book some profits, or protect yourself, hedge, balance it, whatever you want to call it. The third and most likely scenario would be if they come out and say nothing new, they change nothing significant in the wording, and they want to leave us guessing. This would be the smartest thing to do, in my opinion, if they don't plan on raising rates until September, because what that does is it leaves us all guessing. It leaves me believing it's going to be in December, you or somebody else believing it's going to be in September, and somebody else, a whole bunch of people, still believing it's going to be 2016. So this somewhat diffuses the expectations. Therefore, the actions are not unified. Not everybody is rushing for the same door at the same time. There's door number one, door number two, door number three. Okay, so if I was her, I would say nothing definite. I would not pin a date. So I would not lead anybody to be able to believe that they can pin a date. I would say what I said last time, basically. So anyway, so what am I doing next week? I'm watching, what am I watching next week? I've been watching the same stuff I'm sharing with you. I'm going to push them over to next week. Number one, the green shoots. Let's start with the good news. The green shoots or the small caps today were barely down compared to the broader indices. Now, okay, this was today's action, price action. Let's see if I can show you. You see, let's zoom in. Anyway, the S&P fell hard, but these are the small caps. Look, I mean, yeah, they fell hard, 1254, but they rebounded quickly. They tried it again. They rebounded quickly, and look, they're almost flat, right, on the day, whereas these guys are head down. The worst was the NASDAQ. Apple was really bad. So if we look at the week, before I finish my statement, these are weekly candles. I'm going to change this one to the S&P, SPY. And this is the NASDAQ, and these are the small caps. And so before I look over the ranges, today the NASDAQ outperformed. So that's a green shoot for next week. So I am watching next week's NASDAQ's performance. Okay, I mean, sorry, the small caps performance. It's a basket of 2,000 stocks. If you don't know what it looks like, I'll show you. This is the whole market. This side is the S&P 500. That's the S&P 100. And that is the Dow. And this is the NASDAQ 100. And these are the small caps. Look, it's a basket. You can't see the bottom of it, but it's a basket of 2,000 stocks. So they speak better. They represent better, quote, the market than, 30 or 100. Right? It's a basket of 2,000. That's why I listen. They tend to move first and furthest. So they move first up or down, and they usually move pretty fast. So two things can happen. The small caps can say, come on, join the party. I'm trying to break out. They're like inches away from an all-time high. Look, if you look at the last weeks, every week has been higher and higher and higher except for that little one. So they've had, let's see, 5 out of the 6 weeks green. I mean, that's like a rally. Meanwhile, the other guys were just dragging. Okay, 3 negative weeks back to back. I could have sworn this was red up until the close. I don't know how it flipped to green. It must have been I must have been looking at something else. Regardless, it's still not a good trend. Lower high, lower lows. This one is droopy. This is the NASDAQ. So the small caps are in party mode. These guys need to join the party. Now, there comes a time where the small cap says, hey, you're not joining the party. Forget it. I'm joining your party. So they join the red party and whoosh, they give up too. We don't know that. So there's going to be a catalyst, and most likely next week will give us one way or another. So I'm watching the small caps. That's number one. Apple. I need a leader. Apple has been dragging. Today, Apple underperformed the market, underperformed Google twice, underperformed Google twice as much. It was twice as bad as Google, for example, is what I'm saying. So 3 candles for Apple. Stuck. Resistance, resistance. And we called it. Yeah. Tim Cook needs to do more buybacks, I guess. So if not Apple, I need a leadership. I need somebody to step up, whether Apple or a leadership role from, say, the biotech, maybe? Biotech is a big box in the NASDAQ. That's Apple all by itself. Biotech is a big box. So they can step up. Microsoft could step up. Somebody else could step up, or a whole collection, or an industry. So there can be other heroes, but Apple seems to be the default hero. It needs to show leadership. Rates. Rates are going to be moved based on Yellen and the ECB. They will move markets guaranteed. Guaranteed. Also, the fact that currencies are always a hot button. Now, if currencies move big, they will move, other things will happen which will in turn move markets. It's unavoidable. So these are still my main focus. I also was looking at the financials, but that goes along with rates. If rates rise, then because she says one thing or another, Yellen, then the financials will do better. And I warned you last week, before last week, if financial rise, markets could fall, and that happened. We called it because they're rising for a bad thing for the market, temporarily bad thing for the market. So financials are always something to watch. And as far as what are we doing for trading, you see me sending notes, I can do this and I can do that, because every portfolio is different. Personally, you've known me to short pops that are undeserved. Why are they undeserved? If they're popping or rising or rallying based on relief, meaning they're expecting Greece to fall apart and they came out with a headline, they kicked the can 4 months. That's not a reason to rally to new highs. It's a reason to rally relief. It's like, oh, I think it didn't happen. Something bad didn't happen. But I have nothing new to drive higher prices. If they're rallying because Yellen is not only not raising rates, she's actually going to add stimulus somehow, that's a reason to rally. They brought in fundamentals. Otherwise, it's just a relief. Something bad did not happen. Ooh, okay, let's buy a little bit. Buy back what we just sold. Relief pop. So I can book profits, or I can try to offset them with some opposing trades. So if I'm short the NASDAQ somehow, and I could book the profit, or if there's still a lot of money left or a lot of meat on the bone, and I believe that the Nasdaq is not falling. If that's the case, then I would take an opposing trade, as long as it fits my parameters. If not, I have no problems booking profits and leaving money on the table. It's part of doing business. Okay, so that's how I usually trade. So booking profits, whatever my trades are, and or balancing my portfolio. So I look at what I have. If I'm short here, I'm short here, I'm short here, and I am, I'd want to add a few longs. So I'll add a few longs here, and I did, and I told you about them. I add a few longs here, and I did, and I told you about them. And so now I have a somewhat well-balanced portfolio. However, if markets go to zero, I know I'm going to be on the gaining side because I have more to gain than lose. So I'm still well-balanced. We can crash. We're not likely to crash up. That's why I'm more comfortable at all-time highs taking short trades rather than long trades. I keep telling you that, but I'd like to remind you. All right, so that's one thing I'm doing. I can add new trades for shorter terms, like the ones I sent out. Okay, I'm trying to game the week, even though it's for active trading only, and I may or may not take them because I might not want the headache for a volatile week. And that would play into iron condors or short term. Those also work with good management. And also a few flyers. If somebody wants to, if I'm short a lot of things, which I am, and I want to take a flyer on a stock, so I have a hunch that Twitter may actually regain some of the glory it got overnight. You know, Costello was pushed out of position basically. He left, but most likely because everybody is saying, hey, when is your last day? When is your last day? When is your last day? Everybody that's not at Twitter. So the prices rallied overnight Thursday when they said he's leaving. And then minutes later, when they had the actual conversation, the company said, we're going to still do whatever he was doing. So it's like, what? I thought you guys pushed him out. Are you going to change the plan? And they priced it all out. It actually went red today. And if you chased it last night, you lost a little money. But now you say, okay, now what? Let's look at Twitter. Now that I'm talking about Twitter. What are they likely to do? This is 6 months worth of trades, 9 months, sorry. So it's towards the end of the line, but it has seen 30 before. If I zoom out to 1 year, I think you'll see it actually a little longer, lifetime. You can see that it has gone down. But this is an area of recent support. It's right at it. Okay. So if I'm caught, I may want to, hold on another day or two. Maybe I'll be pleasantly surprised. Now, if we have a market rally next week, I have a hunch that Twitter is going to be here. In fact, I'm going to put a little circle. There's a good chance, not a good chance, an outside chance Twitter is going to hit that circle, thereabouts. So if I wanted to put a lottery ticket, and for those of you new, lottery ticket meaning a few bucks I spend and I throw in the trash just like a lottery ticket. I have a hunch, I choose my numbers, I throw a little money at it. If I don't win, hey, that's okay, I participated. It's not a position, it's not an investment. It's a hunch, throw, trade that could pay well, and I don't cry about losing the money. And how do I do that? I can do a cheap debit call spread. I haven't priced it, but I'll do it on Monday. So cheap, buy the 40 call, sell the 41, buy the 38 call, sell the 39. Those are two different trades. Depends on what's cheap to you, okay? All right, so I can do it close to the money and pay up a little bit. This way, if the pop happens, I immediately benefit, or go cheap and have to guess not only direction, but also magnitude. I need to guess that it's going to go up and by how much. Again, this is not an investment, just a pure lottery ticket, okay? The investments happen on fundamentals, like what I send out with details, with videos. Not, hey, I'm buying this on a hunch. That's not an investment. That's gambling. That's Vegas time. But every once in a while, it's fun to do here. All right, so I don't want to keep you too long. I will do a write-up, kind of like a report card like we did last week to see how well we did with our ranges, but I don't know if I'll be able to do it today, so expect it over the next few days. Nick signing out. If you have any questions, please do not hesitate to ask, especially for those newer members.